Unless you've been living under a rock, you've probably heard about cryptocurrency, most notably Bitcoin. But what exactly is cryptocurrency? How does it work? And could it change how we transact money forever? Let's take a trip down memory lane and explore the fascinating journey of money and cryptocurrency. Welcome to Blue Chip Mindset, the winning mindset for success. If you enjoy the video or learn something new, please give it a like. To fully appreciate the significance of cryptocurrency, we need to rewind the clock. Back to a time well before people weren't paying their rent by selling feet pics on OnlyFans to explore the evolution of money. This journey sets the stage for the digital currencies we're navigating today. The concept of money has seen quite the evolution, morphing from simple barter systems to the complex digital transactions we're now accustomed to. Originally, our ancestors utilized the barter system, trading goods and services directly without a uniform medium of exchange. Imagine trying to figure out how many apples are worth a cow, and you'll get the picture. For all its simplicity, this system had significant drawbacks, such as the absence of a standard measure of value, and the difficulties associated with storing and transporting wealth. Paying for a house with a herd of sheep, or keeping a barn full of grain for emergencies was, to put it mildly, highly impractical. The shift to using items like shells, beads, or metals as money was nothing short of revolutionary. It offered a way to carry and divide wealth that didn't involve livestock. As societies grew more sophisticated, we graduated to precious metal coins and then to paper money, a concept that required a leap of faith, believing that a piece of paper could represent real value. This whirlwind of history brings us to the doorstep of digital currency, where the physical becomes virtual and the tangible turns intangible. Digital currency flips the very concept of money on its head, much like how social media has redefined fame. The 20th century brought about significant innovations, including credit cards and electronic banking, paving the way for digitalizing financial transactions. Despite these advancements, traditional financial systems remain centralized, with banks and governments controlling the issuance and regulation of money. Against this backdrop, cryptocurrency emerged, promising a new era of decentralized finance. It all started in 2008 when an anonymous person or group of people using the pseudonym Satoshi Nakamoto published a white paper outlining a new electronic cash system. This system was based on a revolutionary idea, a decentralized network allowing for secure peer-to-peer transactions without needing a middleman like a bank. Satoshi Nakamoto implemented this idea in the form of a digital currency called Bitcoin. The first Bitcoin block, known as the Genesis block, was mined on January 3, 2009. Its creation shattered the centralized grip of traditional financial institutions, known for manipulating systems to their advantage, as evidenced by the 2008 recession. On the other hand, Bitcoin operates on a decentralized network, where every user has a copy of the ledger that records all transactions. This makes it almost impossible for any one person or entity to manipulate the system. Bitcoin's decentralized nature also eliminates the need for intermediaries, reducing transaction fees and making it accessible to people who previously lacked access to traditional banking services. As Bitcoin grew in popularity, its value started to increase. In 2010, the price of a single Bitcoin was only a few cents. But by December of 2017, its value had skyrocketed to almost $20,000. And in November of 2021, it topped out just shy of 69 grand. This meteoric rise attracted a lot of attention. It made Bitcoin a household name, as it sits at the top of all other cryptos, with the largest market cap and is accepted as payment worldwide. However, with its popularity came criticism. Some people saw it as a tool for criminals due to its decentralized nature, which made it difficult for authorities to track illegal activities. Others criticized its volatility and that it wasn't backed by any government or central authority. Despite these challenges, Bitcoin continues to thrive, up 45% in the past 3 months at the time of making this video. Real quick, what are your thoughts on crypto? Is it a pyramid scheme that will someday fall like a house of cards? Or is it the future of money? Drop a comment below on what you think it is. And please show the video some love by tapping that like button and subscribing to the channel. I'd love to have you aboard. Shifting gears from the broader discussion on the future of finance, including the controversial world of crypto, let's dive into a more relatable, everyday financial interaction. Consider the following scenario. You want to thank a friend who treated you to lunch by transferring money to their account online. Several issues could emerge in our current payment system, such as technical difficulties at the financial institution causing its systems to malfunction. There's also the risk of you or your friend's account being compromised, leading to identity theft or a denial of service, or you might exceed the daily transfer limit imposed on your account. These scenarios highlight a fundamental vulnerability within the banking system. Because of this, the future of currency may lie in digital tokens. Imagine a similar transaction between two users on a cryptocurrency app. The sender initiates the transaction and the processing begins. The system verifies the user's identification, checks whether the user has enough funds to complete the transaction, and so on. Then the payment is transmitted, and the funds are deposited into the receiver's account within minutes from your smartphone. Cryptocurrency eliminates many of the problems associated with modern banking. There are no restrictions on the amount of money you can transfer, your accounts cannot be hacked if properly managed, and there is no single point of failure. Now, let's dive a bit deeper into the technicals of cryptocurrency and how it all works. Cryptocurrency is a digital currency that uses encryption techniques to control the creation of new coins and secure transactions. It's a currency that exists entirely online. It's not tied to any government or a physical object. Cryptocurrency runs on a public ledger called a blockchain. It records the digital history of every cryptocurrency transaction, making it virtually impossible to forge. It's decentralized, meaning it isn't controlled by anyone. No one country or organization can decide what happens to the currency. No one person can increase or decrease its value. That means that nobody can hold your money hostage if you don't pay up, and it also means that nobody can manipulate your coin's value by artificially inflating them, which is the opposite of traditional currencies, when central banks print more cash than they need to keep interest rates low. Cryptocurrency relies on consensus algorithms to verify transactions. Every node in the network must agree to a transaction before it's added to the blockchain, ensuring transparency and preventing fraud and manipulation. Additionally, these algorithms prevent any single entity from gaining control over half the network, enhancing security. The decentralized nature of cryptocurrencies is one of the main reasons they're so appealing from a user perspective. It may change how we transact money forever. Cryptocurrency might still be the new kids on the financial block, but they're already schooling us on the future of money. Remember, diving into the world of crypto is still the wild, wild west, so only invest what you'd be okay with losing. If you're seeking a secure haven for your crypto assets, consider exploring the ledger link in the video's description or the top comment I've pinned below. Acquiring a Ledger cold storage wallet is widely regarded as one of the most reliable methods to safeguard your cryptocurrency, as it keeps your assets safe, secure, and offline, impervious to theft or hacking. I personally own two. And for those of you actively involved in cryptocurrency investments, I'm curious, what are the top 5 coins in your portfolio or on your radar for purchase? Share your thoughts in the comments below. I hope you enjoyed the video or learned something new. If so, please like, subscribe, and turn on all notifications. Until next time.